So let's bring in now Simplify Asset Management, their chief strategist, Michael Green. All right, before we get to our warts, Michael, the world still has an amazing appetite for our assets, particularly our stocks. This is portfolios flows into the U.S. 1.65 trillion over the past 4 quarters alone. China was negative 113. So, this notion that China is passing us up economically is not reflected in foreign direct investments. It's not reflected in where people in themselves, foreigners, are investing their money.
Yeah, no, I think that is absolutely correct. And I think this is one of the challenges that we have is there's a narrative and there's the reality. And the simple reality is the United States financial markets continue to be the deepest in the world. They continue to be the source or the destination of the vast majority of funds that supports the dollar. The dollar, for all the characterization of it collapsing and losing its reserve status, has actually gained in transactions and importance relative to almost every other currency on the planet over the past decade. It's just unfortunately not true that China is taking over in the way that we would like to imagine. We don't have transparency into their politics the same way we have transparency into ours. They are experiencing some extraordinary challenges that candidly the United States went through at the tail end of the 19th century. We know how that game plays out. There's a lot of disruption ahead for China.
What do you make, for instance, sacking, the Xi sacking all these generals? It's not the first time he's done this sort of purge, but apparently even one of them was his best friend. So, I've seen that written positively. I think might have been FT, like, that's what you do. That's like he's so corruption, but it feels like there are some internal problems there that are not being reported in this country.
Yeah, there are extraordinary challenges. And what you highlight in terms of the anti-corruption purges, anti-corruption simply means you're aligned against the general secretary of the party. The simple reality is that he has all sorts of challenges, whether they're demographics or whether it's been created by the Trump administration. Redirecting Chinese products from the United States to the rest of the world has suddenly opened up the rest of the world's eyes to what we've been talking about for well over a decade, that this is simply an unfair trading situation. They're starting to institute their own tariffs, their own restrictions against China.
So then this brings us to the debasement trade and the surge in gold. So great gold bulls, and some of these events that may have spurred it. Here you have debt debasement. A lot of people are pointing to that. There's other, obviously, factors. But what does that say? What does the spike in gold and central banks buying gold say about our dominance or the ability or belief that we'll remain here?
Well, I think unfortunately what it says is 2 things. So if I were to point to this chart, I would not highlight 2022 as Liz Truss. I would highlight that as the U.S. taking Russia's reserves in the form of treasuries.
Right.
That basically sent a very clear warning signal to the rest of the world, particularly China, that they could not invest their trade surpluses in U.S. treasuries and treat them as safe. They redirected into gold. That was largely ignored by the market for an extended period of time. We saw retail flows leaving gold. And you could see this in the ETF structures, for example. Right. The simple reality is once price began to capture people's attention, we redirected those flows into gold. And now we have large sums trying to make it into a relatively small market that is causing the price appreciation that we're seeing. Gold has become a bit of a meme stock.
Okay. You and I have talked about this. I always say capitalism sort of needs to maybe revitalize itself from time to time. I thought this is an intriguing quote, right? About the rate of profit does not, like rent and wages, rise with the prosperity and fall with the declination of the society. On the contrary, it is naturally low in rich and high in poor countries, and it is always highest in the countries which are going fastest to ruin. So, I bring this up because our profits are at an all-time high. Mm-hmm. I think we're going to bring up that chart here. Prosperity is at an all-time high. But there's something within this country where it's not being shared the way it used to be shared. And many people say, argue Adam Smith would be happy with this, but this quote seems like he wouldn't be happy with it.
No, he wouldn't be happy with it at all. And unfortunately, what we are seeing is consolidation across the U.S. economy is removing competition. That is actually why Adam Smith made that observation. In countries that have competition, profit margins tend to fall. Competitors are taking away the free lunch that is available for serving your customers. In countries that have a lack of competition, unfortunately, the U.S. is showing more and more examples of this. You see rising profit margins because they no longer need to compete for their customers. Their customers are increasingly captive. We see this across food products. We see this across automobiles. Right. We see this across housing.
Can this change? I got 30 seconds. Can this change organically or does there have to be some sort of upheaval for this to change?
It didn't change in this direction organically. It changed because of policy decisions. We instituted what's called the Bork Doctrine. We stopped enforcing antitrust. We removed the barriers to horizontal and vertical consolidations. And unfortunately, this is the byproduct of it. It will require regulatory change. It's one of the reasons why I honestly believe the Trump administration, if it wants to succeed in its objectives of affordability, et cetera, needs to pivot in the opposite direction.
Mike, great stuff. Really appreciate it.